Hey guys, Bourse BK Forex. Welcome to our January 25th, 30th edition of Where Are the Trades. It's been a while that I've done this because it's been actually very, very crazy trading situation. But now at this point, I think we can take a look at the charts and try to collect ourselves and have a good idea of at least some semblance of where things could possibly be at this point. It's certainly been an incredibly lucrative and very, very volatile session in the Eurodollar over the last week. We've had a great time trading in our chat room, but for those on the wrong side of the trade, those trying to sort of find the bottom on this thing, it's just been an incredibly painful experience as every single dip has turned into a collapse and a decline. I think it's really kind of interesting to take a look at a couple of things here. First of all, obviously, you have a massive, massive downward trend from 25 all the way down to 12. It's 1,000 points. 1,000 points in FX generally is an important stepping stone, especially in a major. You know, when something drops by a dime, by 10 pennies or more on a major and on amongst the G10 industrialized economies, it's significant. And unless you basically sort of bet on the fact that the euro is going bye-bye and the eurozone is breaking up, clearly I think the momentum for some semblance of a stability or consolidation definitely taking place. Secondly, if you look at this sort of on a technical basis, an interesting view here, and the irony of the whole thing is that I showed this to people, and everybody. Let me see if I can just zoom in. Just bear with me. It's really funny. This is always very much human psychology. Everybody says to me, "It's in a huge downtrend. You don't want to be buying this because its momentum is to the downside." Which is exactly when you kind of want to buy things. I mean, things are made, spike bottoms are made exactly when everybody is convinced that there is further downside to go. But from a statistical point of view, what you have here is 6 consecutive weeks of downside action. You clearly had a big, explosion of downside action this week. So it could be, depending on how you look at it, this is a big momentum move, and you definitely have a chance here to extend all the way to 110. Or that this is the final psychological blow-off move. I actually believe that it's the first scenario. There's still a little bit of momentum here, but the momentum is at the last gasping place for the near term. I'm not calling for the euro to find a permanent bottom at 110, but I think if you look at the monthly charts, and you see I'm really going back many years, what's interesting is that you have these dips below the 110 and dips back above 110. One interesting thing, by the way, notice, this is, I think, really interesting when you look at the monthly charts, is huge collapses in price, right? And everybody and their mother gets incredibly bearish. But when you study, and I'm just going to zoom in on this so you guys can actually see this. So first, the point being is that 110, clearly a big magnet here on the charts that looks like it's going to be support one way or the other. But now, yeah, I just want to zoom in again. What I want to show you is what happens when you have massive price collapses. And you have a couple of examples here on a historical basis in the monthlies. And what you see here is you have these 2-3 big monthly downward candles. What's the next move? The next move is actually a vicious move to the upside, right? Even over here, big monthly collapses, perhaps a consolidation, and then a vicious move to the upside. This is exactly how the shorts get themselves destroyed because they just keep thinking, oh, like all bad generals, they all fight the last war. They think it's the downtrend, when in fact it's a vicious counter trend against the downtrend. So to me, I think technically we're setting up for this kind of a structure. It's important to be aware of it. Maybe we're not quite there yet, but when you have this huge, massive explosion to the downside, perhaps we need to see 1 month of consolidation on a longer-term charts, but they will be 300 to 500 to maybe 700 point counter trend rally, and a lot of money is going to be lost trying to short that rally and get squeezed out continuously. So I think that's one of the more interesting aspects of where the euro is at this point in kind of watching it. The other currency is not as interesting. I mean, the yen has been the same old story forever. I think it's sort of informative for us to take a look at the monthly charts just to get a little bit of a breathing perspective on these weekly technical analysis. And clearly, it's basically at this point 117 to 120 trade in the yen, consolidation. The market is waiting to see if the Fed really is going to pull the trigger. Now, if the market gets convinced the Fed is definitely going to pull the trigger, we clear the 120, 121s, 125 comes into view. But for now, we're in a stasis. So whatever rallies you have, I think will be modest in nature. Looking at the weekly chart here, you clearly have the 120 overhang as a big resist level, and we do have at the same time a very strong 115 support. So it's just a tug of war between the bulls and the bears, as we're just effectively consolidating and spreading out and just extending out over time the same price move that we had over here. Many times you see this on the charts where you have a big concerted huge price move, and then the as wide as this is long. So this is I don't know 1,000 points high, and this is going to be like 1,000 points long in terms of structure. In terms of consolidation of the price, it means that yen is just not going to go anywhere for the near term. I think pound dollar mirroring euro very clearly from far beat days. This is what am I looking at? The weeklies, 170. But if you look at this is 14, we were at 170. It's unbelievable actually to think that we're 20 pennies below this level. But having said this, the 150 on a longer term charts really an important support level. It's in the support level from 13 that got bought very strongly, and a halfway decent support level even from the 10s. So again here, yes, you probably have downside risk passively to 47, maybe 46 and a half. But that is your downside risk, and it's probably an interesting opportunity to start nibbling for long positional shorts here as support comes in. The story with cable, it's just not a non-story. Yes, the economy is doing relatively okay. QE is certainly going to get pushed back. The news from the BOE this week was actually relatively dovish, whereas the hawks pushed back and actually reversed their calls for interest rate hikes. So chances of BOE rate hike this year, pretty much zero. But at the same time, the economy itself not in a horrid shape, and it should trundle along. If you get any kind of a disappointment with the Fed, you may have just sort of a counter dollar move here that just simply could lift the pound to the 53s, 54s. For now, though, the value proposition probably lies around the 47 level, so it's definitely a small accumulation into these levels trade as we get into major support. Actually, sorry, I don't want to go to dollar CAD. Dollar CAD has been a really big story. I mean, I should actually, let me just focus myself. Usually we talk about Aussie, but dollar CAD is really worth taking a look at. Look at this move on the monthly. This is oil screaming, squeezing me higher. But we're coming now to these incredibly important 125s. Do I think we're going to take out 125s? I think there's a reasonable chance that we probably could take out 125s this week if you get any further decline in oil. But having come here to this level, the big question you have to ask yourself is how much more downside do you see in oil? If you're a $30 bear, yeah, this thing could go to 130. If you think pretty much oil goes no further than 45 that we see here, there's a strong case here for start initiating a relative strength trade, meaning that Canadian dollar kind of taps out of its weakness at around 125s, both technically and perhaps fundamentally, on a bet of bottoming out of oil. It's really a bottoming out of oil trade right now, and that's what the dollar CAD is showing you. On the Aussie side, today was frankly an interesting day because I really thought they would hold the 80s. It's interesting what's happening with the Aussie right now. The primary value proposition of Aussie is, of course, it's one of the few yielders in the G10 universe, and therefore still very attractive for the carry trade. The negative aspect of it is that commodity prices continue to press to the downside, which obviously impacts Australian economy. But the question is, I really wonder at how narrow-minded that view is, because the Australian economy is not just commodities, and it's clearly diversified itself into retail and tourism, and all of those areas should actually do quite well under the low Australian dollar regime. So it's really a question of whether you think Australia is just nothing but one big block of iron, and the fact that commodity prices go down is really weighing on them. The other ancillary fear, and that's the reason why you see the 79 handle in the Aussie, is the fear that RBA is going to effectively signal or perhaps even go out there and cut rates. They certainly have the scope to do that. They have one of the richest yields in the G10 universe, so therefore they have plenty of ammunition. They don't have the inflation, but at the same time they also don't have very serious contraction. They have essentially what I would call a steady as she go economy. So would the RBA want to use up their interest rate bullets so early? If they come out and effectively reaffirm their statement, issue no new guidance, and do not suggest that rate cuts are on the horizon. We could have a more positive tone in the Aussie. And of course, I thought the 80 would hold. It clearly hasn't, but at the same time, 80 is a major support level. What is the spike low here? I think it's the 77, right? So it's really, if you're positionally trading, it's really 77 that creates the ultimate low here as a support level. And it's a question of whether it's going to catch itself before 77 and reverse towards the 81s, 82s on a more bullish RBA. If RBA does cut rates, then I think you see 75, because that really would be a big surprise to the market, and in fact a capitulation by the authorities that the economy is truly on the verge of a recession. So a really interesting setup in the Aussie here at this point, where you could be within 100 points of an intermediate term bottom, or we're just going to completely collapse towards the 75s, depending on how the RBA goes. Last, let's just take a look at the Kiwi. Which has not been doing nearly as badly as the Aussie, but definitely it's supported by a very nice yield. We do have RBNZ. It'll be interesting to see if they communicate any further. Inflation data in New Zealand definitely coming down, but New Zealand is insulated from the sort of massive commodity shock to the downside, because they're producers of softs rather than hard commodities. And as a matter of fact, dairy prices have finally stabilized, started to go back up. I mean, if you think about the natural aspect of it, 1 billion Chinese people are going to have to drink dairy, and that's going to happen whether the global economy slows down or not. And New Zealand ultimately gets a huge benefit of that. So it's very levered to, I think, even a small stabilization uptick. At this point, so much of negative Chinese demand has been factored in that if you have just a mild uptick from China, it does lever the New Zealand dollar in some ways. What's interesting here is some people who are trading this. The result of this positive Kiwi, negative Aussie trade has been, of course, this big decline in the Aussie dollar, but it seems to have finally stabilized. So the relative trade between Aussie and Kiwi seems to have finally stabilized, but I wonder if it's just simply a pause that refreshes, because a break here below the lows over here of 144.50 still brings in the prospect of parity. I do think that parity could still be a potential trade here, especially if RBA cuts rates, and Kiwi is the last man standing when it comes to interest rate yield. So that's kind of how the big stories shape up for this week. Lots of really interesting levels. Certainly, Euro becomes a prime focus here. The run towards 110 is going to be very, very tempting, but beyond that, I think it's going to finally invite some bargain hunters, unless all hell breaks loose and we really begin to price in the prospect of Eurozone breakup, which I still think at this point is a very minimal risk. So wishing you guys the best of luck, the best of trading. It's Boris Schlossberg, over and out.